Welcome to our weekly Ask the Fund Manager series. The premise is simple. We put a fund manager on the spot and we ask them questions about current events and how these events impact on investment markets. We aim to keep it interesting and understandable and do this all in under 5 minutes. We hope you enjoy.
It's been a perplexing month for investors. So you've got this ongoing volatility in markets. You've got the ongoing conflict in the Middle East, although it has reached stalemate territory. And then at the same time, you have headlines confirming that particularly equity markets are back at all-time highs. Today, we're going to be thinking about the three big themes for the month of April that really impacted markets. And to discuss this, I'm joined by portfolio manager Harriet Ballard.
Hi, Luke.
Hi, Harriet. Good afternoon. Okay, so what are your three main themes for the month of April?
Well, the first, of course, has to be geopolitics and oil driving markets. The second is resilient growth in earnings. And the third would be a very stop-start recovery in risk assets.
Absolutely agree with those three themes. So let's start with the first, geopolitics. So what changed from everything that was going on in March?
So at the very beginning of the month, there was a ceasefire announced, and that triggered a very sharp relief rally. Oil prices fell and equity markets moved higher. But the recovery was interrupted as tensions picked back up again, particularly issues and concerns around key shipping routes. Oil moved back from the mid-90s to over $100 per barrel, and that forced markets to reassess how durable the recovery really was. Because the key is not just what level oil is hitting, and in April it actually hit $117 a barrel, which was similar to the levels we saw at the end of March, but it's about how long oil prices remain elevated. And April was a month where, again, oil prices remained high.
Which brings us quite nicely into how oil actually impacts markets, and particularly how it links to inflation, which has been a big talking point over the last couple of months.
Yeah, absolutely. So oil, of course, feeds very directly into fuel prices and even fertilizer. But then that has second round implications for many areas of the economy. So it costs more money to grow food, it costs more money to transport goods. And the key for central banks will be to what extent these higher prices lead to higher inflation expectations, because if consumers expect inflation to be higher, they may well demand higher wages to compensate for this. And crucially, if those higher wage requests materialize, then the central banks could have a far bigger problem on their hands, with higher wages leading to higher inflation and a bit of a self-fulfilling circle. We've seen so far in April that inflation has been the main concern for markets from this war, more so than growth. And as we saw in 2022, that can lead to equities and bonds trading in the same direction. Looking forward, the key question will be, is there a lasting growth impact, or is this just an inflation shock? If it is just an inflation shock and the oil supply is resolved quickly, then the outlook for risk assets for the remainder of the year is far more positive.
Yeah, and there's a lot of uncertainty baked into that question as well. And it brings us on to, I used the word perplexing earlier, brings us on to the fact that despite all of these headwinds and everything that's coming through from the press around the conflict and the oil price, we're back around all-time highs. So what's been driving that recovery, Harriet?
Of course, there have been moments where headlines around the war have created supported resilience in the markets and led to a bit of a relief rally. But the main support has actually come from a resilience in earnings. So the US earnings season has been stronger than expected. A high proportion of companies beat forecasts. Large technology firms have continued to deliver strong results, particularly in areas like cloud and AI. And that's helped equity markets recover quickly after setbacks, especially in the US. So while sentiment has been volatile, the underlying fundamentals have been acting as a stabilizer.
Yeah, and I think it's worth just to add to that. This was really a phenomenal start to the US earnings season, where we've seen over 25% year on year earnings growth against this really challenging backdrop, which is surprising, but also quite positive. But actually, if we think about winners and losers here, so it's not really been an evenly distributed recovery in markets.
No, it's been quite uneven. But some of that has been those that were hit hardest in March have recovered more. But also, I think there's a broader story. At the beginning of the year, we had expected equity performance to broaden out. However, we have seen again large cap tech lead the way in earnings growth. These sectors have driven a lot of the upside during the recovery phases, and they're arguably less exposed to changes in the oil price. Meanwhile, more energy sensitive regions like Europe have lagged. So headline indices can look resilient, but the recovery has been relatively narrow underneath and unevenly distributed by region.
Yeah. And in a way, we're back to then focusing on that big US earnings story again. And I think that highlights the level of uncertainty that we've got in this environment, and the surprises that come through as well. So how do you manage money in an environment like this?
It's important not to get overly distracted by short-term noise and headlines where you can't have an edge. We have to focus on the bigger picture and retain our longer term thinking, look through the temporary disruptions, assess whether fundamentals are changing or if opportunities are arising from markets moving away from fundamentals. We have maintained diversification within our portfolios and risk where appropriate, and we stand ready to act if markets start pricing more extreme outcomes.
Yeah, and it's also, just for those listening, just serves as another example of a time when it could have felt easy to really de-risk or take risk off the table, but actually staying invested has ended up, at least in the short term, being the right outcome. So in the interest of time, we're going to wrap up there just to summarize. So geopolitics and oil still very much in focus, but I think the good news is that the fundamentals that underpin markets and macroeconomics are holding up pretty well. And we have had this really robust recovery, and hopefully that continues. I'm just going to finish with a stat of the month. So if we think back to the bottom of the market in the middle of March, the S&P 500 has recovered very significantly in the US stock market, but only 7 stocks, and many of those are the Mag 7 stocks, have accounted for over half of this gain. Thank you so much for joining today, and we will catch you next week for another topic that's caught our eye. Thank you.
Thank you for listening. We hope you enjoyed this episode, and we hope you listen in again next week. Also, we love to get feedback and ideas for future episodes. You can use the link provided below to share your thoughts. Before you go, just some important information to be aware of. Unless otherwise stated, any opinions expressed are those of Aviva Investors. You should not be viewing this as an indication of any guarantee of return from an investment managed by Aviva Investors, nor as personal advice of any nature. Information contained herein has been obtained from sources believed to be reliable, but have not been independently verified by Aviva Investors and is not guaranteed to be accurate. Past performance is not a guide to the future. This material is not a recommendation to sell or purchase any investment. The value of any investment and any income from it may go up as well as down, and the investor may not get back the original amount invested. Nothing in this material, including any reference to specific securities, asset classes, and financial markets, is intended to or should be considered as advice or recommendations of any nature.